You're stuck. You know it. You watch portfolios built on the same old rules that don't work anymore. Too stuck in legacy thinking, too slow to adapt, and bleeding opportunity. Traditional investing makes you follow a script that was written decades ago by people who barely understood the speed of today's world. You feel the frustration. You're forced to pick from the usual suspects, diversify by sectors nobody gives a damn about, and wait years for a return that barely matches inflation. You're losing ground while others race ahead. It's maddening. Here's the brutal truth. The old models fail because they treat your investments like a checklist. Stock A here, bond B there, sprinkle a little index fund. Nothing wrong on paper, but it's sterile. It makes your portfolio a slow, lifeless machine instead of a living, breathing network that moves fast with real change. The shame? You're locking up capital in yesterday's bets while new tech, new sectors, and new leaders fly under your radar. You feel like you're watching from the sidelines, slicing second-rate slices of the pie. That helpless anger? It's valid. But there's a way out. Next-gen portfolios don't play by those rules. They don't diversify with cookie-cutter allocations. They build dynamic ecosystems. This means deliberately investing in networks that feed off each other, where one startup's breakthrough boosts another investment's value instantly. Stop thinking of assets as isolated buckets. Start thinking of them as nodes in a web of influence and potential, a web you control and steer. This is beyond diversification. It's a strategy to own sectors that no algorithm can touch because they're linked by collaboration, not random chance. Here's what you need to do. Focus on cross-sector synergies that others ignore. Don't just buy the latest crypto or biotech startup. Look for companies that can feed innovation into each other, like AI platforms powering healthcare innovations or fintech firms, enabling new market infrastructures for emerging industries. Invest not just in companies, but in their ability to connect, adapt, and multiply impact across industries. That's how you get returns that break logic, that defy your spreadsheets. And this isn't just about the assets. Next-gen portfolios require active involvement. This means stepping beyond the role of a passive investor and becoming a connector, someone who consciously links founders with other founders, investors with operators, markets with ideas. You need to build your own syndicate that works fast, tight, and like a well-oiled machine. Trust hierarchy is built on merit and speed, not on old reputations or fat wallets. Be obsessed with the network effect. Your capital is the spark, your connections are the fuel. Ignore the naysayers who push you to play it safe. Safety is a trap. It's a cage built from fear of failure and complacency. Real safety comes from understanding your portfolio not as a static list, but as a living strategy that evolves, responds, and reinvents itself. You master this, and you stop getting surprised by market crashes or tech shakeups. You start creating your own market momentum. Now, go find those founders who challenge the status quo. Back those investors who don't just pool capital, but pool wisdom, grit, and vision. Align with operators who hustle not for headlines, but for real breakthroughs. Build your portfolio around people and projects screaming forward into new frontiers. This isn't about legacy industries rehashing old plays. It's about building a portfolio that thinks global, acts local, and moves faster than any outdated fund. Don't waste another dollar on slow-moving traditional setups. Use capital as a tool to back the few who can shape industries, disrupt markets, and rewrite rules. Be ruthless about cutting what doesn't serve you, and relentless about doubling down on what creates ripple effects, where one win accelerates dozens more. Stop asking if next-gen portfolios can defy traditional logic. The question is, when will you break the mold? When will you stop being a prisoner of safe, predictable, soul-crushing investment patterns? The answer is now, because if you don't, someone else will, and they won't blink twice while your returns gather dust. Subscribe to our YouTube channel and open the featured link to discover more.